Hello, I'm Ron Wilson and welcome back to PD Sessions. Australia has experienced an initial wave of positive economic sentiment in the wake of a change in federal government, but business conditions are yet to improve. In international news, Asian nations have been urged to create their own strategic growth plans, and the US Federal Reserve has lowered its domestic growth expectations. In other news, Australia's newly elected government announced the release of the final budget outcome. Trevor Trahan has the details.
Local consumer and business sentiment indicators in Australia show improvement for September, with the change of government likely to have been a factor, according to HSBC. Consumer sentiment bounced to its highest level since December 2010, lifted by the positive general outlook held by coalition party voters. However, this upturn in sentiment has not had a bearing on business conditions, which have yet to improve and remain around their lowest levels since the GFC. The RBA has opted to leave the cash rate unchanged at 2.5% for a second consecutive month. The RBA's governor, Glenn Stevens, said the Australian economy has been growing below trend over the past year, and this is expected to continue in the near term as the economy adjusts to lower levels of mining investment. According to analysis of ABS figures, property investors accounted for the largest dollar share of new home loans in July, with a 45% slice of the market, ahead of upgraders at 44% and first home buyers at just 11%, the lowest level since 2004. Research from financial comparison website Rate City suggests property investors are flocking to cheap money and making it difficult for first home buyers to enter the market. If the Asian region is to develop further, each nation must form its own unique plan, according to the Asian Development Bank, or ADB. The ADB's publication, Asia's Economic Transformation, Where to, How and How Fast, claimed that while the region has experienced rapid growth in the last 50 years, the growth has been uneven. The report's findings and recommendations have different implications for particular countries. For instance, countries with substantial employment in agriculture, such as Bangladesh, China, India, Pakistan and Thailand, need to develop industries and services that absorb labour. For the advanced Southeast Asian economies, the main recommendation is to focus on upgrading, as they are already quite diversified. Economies that are rich in natural resources, such as Kazakhstan, need to manage those resources well and consider diversification. The US Federal Reserve's expectations for economic growth were lowered for 2013 and 2014, while inflation expectations remained well below the 2% target, according to Wells Fargo. Wells Fargo stated that the downgraded assessment of economic growth means that the US economy is marginally further away from the point where the Fed would like it to be when it begins to taper its monthly security purchases. Despite the economic crisis which continues to embroil Europe, it remains a popular tourist destination. International tourist arrivals in Europe grew by 5% during the first half of 2013, with the best results recorded in Central and Eastern Europe, up 9%, and Southern and Mediterranean Europe, up 6%, according to the European Commission. The Commission explained that tens of thousands of jobs are currently available in the tourism sector across Europe, which could provide some relief to the 26 million plus Europeans currently out of work. The coalition announced the release of the final budget outcome and claims it confirms the deteriorating state of the federal budget under 6 years of Labour governments. According to the coalition, the final budget outcome confirms there has been no fall in revenue and receipts, as often asserted by Labour. Receipts for 2012-13 alone increased by 6.4%, or $21 billion, over 2011-12. Labour racked up nearly $200 billion of net debt over the period from 2007-08 to 2012-13, with Labour's 2013 economic statement forecasting net debt to rise further. Net financial worth deteriorated by $298 billion over the period from 2007-08 to 2012-13. ASIC has released proposed guidance to improve the quality of advice given to investors as part of its continuing focus on the SMSF sector. The regulator's latest review of the sector found there was significant room for improvement in the quality of advice received by clients. Consultation Paper 216, Advice on Self-Managed Superannuation Funds, Specific Disclosure Requirements and SMSF Costs, contains ASIC's proposals to impose specific disclosure obligations on advisors. They include the need to warn clients that SMSFs do not have access to the compensation arrangements under the SIS Act in the event of theft or fraud, and explain other matters that may influence the client's decision to set up an SMSF. APRA has released in final form its Prudential Practice Guide on the management of data risk for all APRA-regulated institutions. Prudential Practice Guide CPG 235, Managing Data Risk, is a cross-industry guide applicable to all authorised deposit-taking institutions, general and life insurance companies, and superannuation funds regulated by APRA. APRA stated the guide is designed to assist these institutions appropriately manage their data risk and is targeted at those areas where it identified weakness through its supervisory activities.